Why Apple is the best stock to buy in recession. So before we get started, make sure to hit that like button and also subscribe my channel. It's been a tough slog for Apple, Nasdaq AAPL, stock over the past year, with shares sinking over 30% at their worst. Even with a potential recession and more rate hikes to come, there are some reasons to believe that 2023 could be Apple's most interesting year yet. Indeed, there are some catalysts, tailwinds, and innovations that could help Apple stock to buck the trend and move higher, even without help from the broader market. I'm bullish. Indeed, true innovation can help power earnings, even when the consumer is feeling a bit spent. As 2023 progresses, I think Apple will show us that it's innovating on many fronts. A few innovations may land in 2023. Recession or not, it's shaping up to be a pretty exciting 2023 for Apple, with a few intriguing innovations that may land over the coming months. According to Morgan Stanley, NYSE, which is quite bearish on the broader market, Apple is its top hardware stock for the year. Sure, macro headwinds could weigh heavily on demand for the latest and greatest consumer tech. Still, Morgan Stanley sees 4 catalysts that could kick in this year: a services re-acceleration, pent-up demand for the next iPhone, a mixed reality headset launch, and a hardware-as-a-service type of model. Indeed, pent-up demand for iPhone is a catalyst that could help Apple offset most of the recession headwinds on the horizon. Over the past few quarters, supply-side woes have really weighed Apple down. Still, there's a good chance that the supply headwinds of past quarters will result in some sort of push forward in demand, the opposite of what we saw during early 2020 pandemic lockdowns. Beyond iPhone 15, which may feature a titanium build, a services jolt, and Apple's much-awaited move into headsets could be a significant boon for the stock. On the services side, a hardware subscription could be Apple's biggest offering to date. It could smoothen out iPhone sales over time and could help consumers justify stepping up their purchases to a higher-tier iPhone, given easier-to-stomach monthly payments. Apple may also have other services up its sleeves for the months ahead. This past week, Apple made headlines for progress with its prick-free blood glucose tracking capabilities that could be included in a future release of the Apple Watch. Such an innovation would make Apple one of the most exciting firms in the health space. Indeed, the medical device market is a fast-growing field that could be ripe for a disruptor like Apple to break into. Apple may very well make a huge impact in the world of health, as it has in consumer hardware. In any case, such health innovations may pave the way for health tracking services. Only time will tell when Apple is ready to unveil such a breakthrough. Regardless, it's an exciting time to be an Apple shareholder with all the potential innovations trickling out of the rumor mill of late. 2023, the year of the Apple headset? Apple's mixed reality headset could be ready for an unveiling during its next WWDC meeting in the summer. Of course, there's a risk that the launch could be delayed further. Apple is known for only launching products that are incredibly polished and ready for prime time. In any case, I do think the odds are high that 2023 is the year that Apple unveils its next big hardware innovation to the world. Headsets are expensive, and the mixed reality space is still nascent. Further, such a headset is likely to have top-of-the-line hardware, which means the headset could be incredibly costly, if not costlier than an iPhone. As a result, the headset launch may be less awe-inspiring than the iPhone launch in 2007 and more akin to an iPad or Apple Watch launch, one that draws intrigue but takes a few years to gain mass adoption. Regardless, Apple's first splash into the headset world could cause many analysts covering the name to return to the drawing board again. The longer-term growth potential behind a headset is huge. The metaverse market could enjoy around 47% in CAGR through 2027, according to MarketSand Markets. Is AAPL stock a buy, according to analysts? Turning to Wall Street, AAPL stock is a strong buy. Out of 29 analyst ratings, there are 24 buys and 5 holds. The average Apple stock price target is $171.94, implying upside potential of 13.3%. Analyst price targets range from a low of $125 per share to a high of $210 per share. What is the prediction for Apple stock? Out of 28 Wall Street analysts covering Apple, 22 rated a buy, 6 rated a hold, and none rated a sell. While 12-month price targets are spread across a wide range from $130 on the lower end to $210 on the upper end, the average price target of $184.68 indicates an upside of till 25%. The consensus among Wall Street analysts is still clearly bullish. Considering the complicated macroeconomic environment we just discussed, it is fair to question the consensus outlook for Apple's stock, which remains broadly bullish. Is Apple immune to an economic recession? What happens when earnings estimates need to be adjusted lower during a recession? Is Apple a recession-resistant stock? In 2020 to 21, Apple's revenue growth shot up as the 5G supercycle coincided with a liquidity pump, loose fiscal and monetary policies. During the past couple of years, Apple has recorded massive sales growth along with enhanced profitability. From a consumer perspective, higher disposable income and free money, stimulus checks, led to a rise in consumer demand, market share growth for Apple's premium devices. Also, the need for home offices boosted the demand for Apple's products. Personally, I don't think this excess demand will stick in the post-pandemic era, especially in the event of a recession. The recent strength in Apple's financial results is spread across all of its business segments. As you may know, wearables and services have served as the major drivers of growth at Apple for the last few years, and these businesses are still growing at a healthy clip. However, the growth in iPhone, Mac, and iPad is already slowing down drastically, and I wouldn't be surprised to see a 15 to 20% dip in Apple sales if we go through a deep recession. While a major chunk of the margin improvement at Apple is coming from the rise of its high-margin, 70% gross margin, services business sustainable, the gains across other revenue segments like the iPhone, Mac, iPad, and wearables are likely unsustainable. Hence, we could see heightened volatility in P&L at Apple in the event of a recession. With all of this being said, Apple's management is not seeing a demand shortfall in the near future, as per commentary from the Q1 earnings call, which called for an $8 billion impact on revenues from ongoing issues, including the war in Eastern Europe and COVID lockdowns in China. A recent report from Reuters highlighted that Apple's iPhone sales stayed strong in July despite a slowdown in the smartphone market. Moreover, consensus analyst estimates for revenue and earnings suggest steady growth for Apple over the coming years. With that being said, I don't think these projections are factoring in a potential recession. In the event of a recession, I see these analyst expectations getting adjusted lower by 15 to 20%. If my understanding of Apple's revenue jump in 2021 proves to be correct, the Fed pulling back on liquidity and the lack of government stimulus checks will hurt Apple's revenue this year. I think the next 3 quarterly reports will be very informative. With the weakness in China's smartphone market and a strong dollar, I am expecting a subdued Q2 report from Apple, which is set to be released on 28 July 2022. Despite returning $657.8 billion to its shareholders via stock buybacks, $507.4 billion, and dividends, $124.4 billion. Over the last 10 years or so, Apple's balance sheet has $73 billion in net cash, with Apple producing $100 billion per year in free cash flow. The company may not achieve its net cash neutral goal for many more years to come. Considering Apple's financials, its management is likely to continue its aggressive stock buyback program to boost shareholder returns, as they have done in the years gone by. With Apple's stock still trading above its mean trading multiples, I don't think the stock is pricing in a recession at this stage, like many other tech companies are for EG, Meta Platforms, META, or AMD, etc. If we were to undergo a deep economic recession like what we saw in 2008-9, Apple's multiples could go down to much lower levels, 10-12x P/FCF. Hence, I do not see Apple as a recession-proof stock. What do you think about our video? Let me know in the comment section below. If you enjoyed this video, make sure hit that like button. Also subscribe our channel before you go. Thank you for watching video.